looking at putting everything together, what we have been going through and discussing as we have gone through each of these videos, right? So today, what we're going to be looking at is putting everything together. Okay, so I trust that you are ready to see what we're going to get into. Okay, so let's have a look at it, right? As I said, we'll be looking at putting everything that we've learned together, the spread, the lot size, and all this kind of stuff that we went through. All right, so by now, after having gone through this entire playlist, or if you've jumped right to this one, you should understand what CFD trading is all about. Contract for difference is all about probabilities and calculating risk, and it's more about yourself than it is about the market. Okay, and what you always have to know is that as a trader, you cannot control price movement. You cannot control spread, and you cannot control the put value. But most important, you cannot control price movement. You can't control the market. You have to know this every time you enter a trade. Just because you've seen a signal or something has matched up to your strategy, it does not mean that price will move that way. It's still a probability. Okay. And as well as the spread, remember, like I said the previous time, that the broker can at any point in time is allowed to just open that spread up and target your stops and that kind of thing, especially during the news, right? So remember that just because you're standing in a profit does not mean that that trade will end as you left it. Okay. As a trader, what you can control your risk. And how do you control your risk? You control your risk by matching your lot size in accordance with what your account can handle, your equity, and of course the leverage which you choose, isn't it? So what you have to always do before entering a trade, what you have to focus on, yes, you have your strategy and everything and all that, but your money management, that is your capital, and so importantly, your required margin to keep a position open. Do you have enough free capital to keep the position open? This is what it is all about. At that lot size which you want to enter, do you have the capacity to keep your defensive line intact? Okay, and see how many pips going against you are able to handle to prevent a stop out, a margin call or stop out. Okay, so thankfully most good brokers, they offer us a trader's calculator. Like the ones I use, they all have traders calculators. So you should calculate your risk before you even enter a trade. Calculate, even as you see your strategy, you see where you put your probable stop loss, take profit, and see the pips. How many pips going against you are you able to hold with your account, with your margin? Okay, so you can open the strategy, not the strategy tester, sorry. You can open the trader's calculator. So let's just have a look at using the trader's calculator for better understanding, right?
This is XM, right? So as you can see here, if you're trading, most of us, we trade our base currency as US dollars. If you want to use any other, but basically it's just all the same, but most we use US dollars, meaning your account is a US dollar account. So you select the pair that you want to trade. So let's say, for example, we use the example which I used, the GU, pound US dollar, leverage. Say you want to use 100 to 1. The account type is a standard account. So there you have your lot sizes. So let's say the micro lot, you want to trade 0.01, you just go to calculate. Now remember what I spoke about the margin? You recall? We spoke about margin. When we spoke about margin, yes, as you can see here, what does it say here? Required margin, right? You see what it says there? $13.36. So to trade a micro lot size 0.01 of pound US dollar of leverage of 100 to 1, they will want you to have $13.36 in your account. Okay, you understand that? You get that, sir? Yeah. So meaning that this is your 100% margin level. And there we get what? The pip value. Can you see the pip value there? It's saying what? 10 cents, right? 10 cents. So meaning that if the trade goes against you by 1 pip, you're down 10 cents. If it's 10 pips, you're down $1. If it goes for you 10 pips, you're up $10. I mean, you're up, $1, 10 pips. Okay. So remember, each time it goes down, what's happening? This margin level is what? Is going down. And remember, I told you the moment it goes below the risk required margin, they are allowed to close your account. But although they'll allow it to get to maybe 70, 60%, some allow it to get to 40% before they close. Okay. So this is what you need to always look at before you enter a trade. You understand me? So if you're going to enter pound US dollar, you must look here to say, all right, if I'm required 13.36, 10 cents a pip, how many pips is that? To me, that looks like 133 pips will get this to 0. So you want to look to say at least 40% of this required margin, because like that's your stop. You understand me? Because the moment you're even 30, okay, what's 30% of this of 1336? Have a calculator. Let's see if I can get a calculator. Because remember I said once your margin basically is below 80, 70. So 70%, let's just say that 1336. No, 13.36, that's $13.36, right? If we say times, I want to know what is 30% of this times 0.3, right? That's $4. Okay, $4, and we said a pip is how much? 10 cents. So $4 divided by 0.10 should give me how many pips? So that's how many pips I can hold for before these guys will shut down the trade. 40 pips. You understand? So don't worry, it won't be difficult. You've got the trader's calculator. You just get this when you see required margin. You look at, you say, okay, what is 30% of that? I have $13.36 in my account now. So I know that if I lose 30% of this, my margin goes, that's without entering any other trade. If I go below 30%, it's as good as they can close my account. So that's what we need to really look at, not at anything else. Okay, and they will not tell you this. So basically here, they will not tell you this. So you can change this, because someone just comes, oh, I'm entering at 0.1. Let's calculate. Leverage of 1 to 100. You see how much money they want? $133. But that's leverage at 1 to 100. But what do guys do? They love to use the highest leverage. Let's put the 888. You see how it will change. So that's again using this micro lot 0.10. Now notice, you see how much he wants. How much is that? 15 bucks. But how much is the pip value? $1. You see that? The pip value is $1, meaning that what is 40% of $15? Let's just have a look at that again. Where's my calculator? Or are we at the end now? But I want this, so $15, right? Sorry. Let's just go there. What's that mean? $15. I want 40% of that. $6. And the pip value is how much? We divide by the pip value. Pip is 1. So how many pips? 6 pips. And your account is blown. You see? So someone just goes to throw a high leverage and they go to throw a high volume in lots. And to tell you the honest truth, for you to enter a trade with 6 pips, remember, I haven't even yet put in the spread. Remember, there's the spread where the broker charges you his spread. Some pairs, the spread is even more than $6. And overnight trades, they open the spread. Remember when I spoke? So just look at this shortcut here. You just see it there. I know FPS, they have one as well. You just go to Traders Calculator. They have it there. So like as I'm saying, you just come here. You can even calculate your profit and loss, but I know that. So you just choose the pair you want, whichever pair it is. Choose the leverage. So you see, it doesn't really matter the leverage. What matters is, can you hold that trade open? Okay. So all this, it will give you that. So it's important. So that's how we.
All right. So as you can see from that example, that is how you use the Traders Calculator. So remember these things. These are your key principles, and you got to put them all together. You got to put them all together. It's all about probabilities and risk. You cannot control the movement of price or spread or the value of trade you enter, but you can control your lot size, you can control your leverage, and of course your equity. Make sure you see the margin required to hold a position. Okay, use the Traders Calculator. Okay, everybody, thank you for watching this video. I hope these videos I'm sure these videos in fact have helped you a lot. Just keep on watching them, and remember, it's important to put it all together. No matter what strategy you're using, you got to know your margin and you got to know your risk before you enter the market. Okay, so happy trading, guys. Remember to follow us on all social media platforms. Instagram always show entry and setups that took place. Use the market maker method. You can see our other playlists and see some free tips and tricks that we share. If you want to be serious and learn how to trade more, feel free to contact us. Okay, so share this with someone, and see you in the next video. Happy trading, guys.
Learn, then earn money online. You control your money. You control the risk and the reward. Start from as little as $10. Stop losing to get-rich-quick scams and pyramid schemes. Learn a legitimate skill of online trading. Already a trader? Stop donating to brokers. Become independent. Stop relying on signals and careless account managers. Learn to trade the market maker way. Take our course and follow the rules of big banks and smart money. Get wisdom. Get understanding. Get wealth. Contact MarketWise traders today.